Hi, everyone. Trust you're well. Trust you had a fantastic weekend. Hey, if you're seeing this screen, if you're hearing the sound of my voice, drop a 441 in the chat if you're seeing the disclaimer. Also, let me know where you're calling in from as well. Let me know where you're calling in from as well. I could see Chicago is in the building. Welcome, Chicago. St. Lucia is in the building as well. Welcome, St. Lucia. Barbados is here. Kent in the UK is here. Trinidad and Tobago is here. London is here. We've got London again, Southeast London, more London. Welcome, London. We got Hertfordshire, UK. Welcome, Nigeria. St. Helens in the UK. Welcome. Miami, Florida. Welcome. Trinidad and Tobago. Welcome. I'm sure we got so many other places. Don't be shy. Don't be shy. Everybody else remaining silent. All right. Well, it's been it's been just over a week, going into 2 weeks, that we have pre-launched our super scalper. Welcome, Canada. Welcome, Canada. Welcome to the building. Please forgive me though. I am under the weather at the moment. My voice is pretty much gone. So we'll try our best to get through, right? We'll try our best. All right, but we have some nice things to look at this week. All right. So anybody here has plugged into the super scalper? Anybody, if you plugged into the super scalper, just drop a 7 in the chat. If you plugged into the super scalper, just drop a 7 in the chat. We have a few more people coming in. All right, yeah, 7. Excellent, excellent, excellent. We have about 5 sevens here. All right. Alola is 7. Excellent, excellent, excellent. All right. On the scale of 1 to 10, 1 being the worst experience and 10 being the best experience, what has been your experience with the Super Scalper thus far? All right. We have one person that says 10. We have one person that says 10,000. Wow. 10. Somebody says 10, nice and easy. Wow. 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 Tens, tens. Nothing but tens today. Tens, tens. Now, you know, the Super Scalper is our educational tool that is teaching. The purpose of it is to teach you several things. All right. Number one, it is to teach you patience. All right. Patience. You notice, right? Somebody says, yeah, it's helping with trading discipline. Exactly. it is a tool that will help you teach you discipline. How many times have you traded and you've made some money and then you got so excited that you decide, I'm gonna go again, and you give all the money back to the market plus more? If that has ever happened to you, just drop a 4 in the chat. Oh boy. Fours, 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 fours. Look at everybody, right? So the tool is there to teach you discipline and patience. Okay? Once you're patient, it kicks in when it kicks in, when the strategy has met its criteria, and boom, we execute, right? And we execute with fixed take profits, fixed stop losses. And once it's hit, it's done, and it keeps the profit. It's not going looking for any more opportunity. It's done for the day. Okay. The next thing that it teaches here, which is vitally important, which we're going to spend a little time on, and I want to show you why this is so important, is the importance of, okay, before I even say this, let me ask a question. What do you think the purpose of trading and investing is? I'm asking you a question. What do you think? You can answer in the chat there, just type, or you can unmute yourself. What do you think the purpose of trading and investing is? All right. Somebody says to grow your capital. Somebody says time freedom. Somebody says education and self-discipline. Okay. Somebody says a return on your investment. All right. Anybody else? Anybody else? Let me see. Somebody says to make money. Somebody says to grow your wealth a day at a time. Somebody says financial freedom. Okay. Risk management, discipline, and financial growth. Okay. So what is the purpose of trading? That's the question. What is the purpose of trading? Why do you want to get, why do people get involved in trading and investments? Trading is short-term, investments is long-term. Yeah, that's true. But both of them kind of serve a similar purpose, to make money. All right, somebody says to make money, and knowing what I know now, a lifelong skill, for financial increase and security. Yeah. Okay, some very good answers. Very good answers here. But I believe this is my own belief, is that trading and investing is to benefit from what, I think it was Einstein that says it, right? To benefit from the ninth wonder of the world. And the ninth wonder of the world is called compounding, right? You're trading and investing to benefit from the ninth wonder of the world, which is compounding. Those who understand it will benefit from it, and those who don't understand it will pay it. And the reason why we're going through this whole process of learning trading is so that we could understand what the compounding effect is. So let's talk about this for a minute, right? Because sometimes I feel like somehow I feel like some people don't get it, or sometimes I think people listen to their the marketers or the YouTube, what they call the YouTube senses about trading and investing, and miss this very, very vital point, right? So let's look at this. Let's do this calculation. Let's say, for example, you have $10,000 in an account. And every week, you're growing this account at 5%, okay? Now, let's go to monthly. Let's say every month, you're growing this at 50%, okay? So 50% of 10,000 in the chat is quick calculation, of course, 5,000, okay? 5,000, good. So let's look here and see what happens when people use trading as a source of monthly income, for example, okay? So you're making 5,000 per month, and you're withdrawing that every month. After 1 year, okay, let's see what your capital is at the end of that period. Let's do the let's hit calculate here. Boom. So look at what happened. So at the end of a year, every month, you're withdrawing your 50% increase because you think that trading is to live by. You need to go and go shoe shopping, right? The shoe shopping crew, you know what I mean? So you would have withdrawn $60,000, right? From your trading account for the year. You didn't allow your trading account to compound over time. Now, let's see what happens to someone who didn't withdraw their money and left it to compound over the same period with no withdrawals. So let's go back here and let's say we have no withdrawals, right? And let's do that calculation again. Your investment is 10,000, interest 50% per month, and you're doing that for a year with no withdrawals whatsoever. Drum roll if you're ready for the calculation. So you see in the calculation, so you've withdrawn 60,000 from your account every month, taking away 5,000. But if you didn't, you would have compounded your account to over $1 million at the end of the year. So 60,000 of withdrawals literally cost you over $1 million not compounding. Let me just let that sink in for a minute. Let me let that sink in for a minute. So for all those people who like to withdraw from their trading account, you are shooting yourself in the foot. Big style. So one of the purposes of what we're doing here is to show you that if you are trading, it is important for you to compound your money over a period of time. The purpose of trading is not for a monthly income. The purpose of trading is not for a weekly income. But the people who are selling you that, they will sell you, oh, you need to withdraw money from your trading account to live on. But they're making money from selling you that. And they compounding their account. The marketers I'm talking about. The marketers are making 20, 30, 40,000 a month, and they're living off of their marketing money. They're not living off of their trading money. Every professional trader has a salary. Professional traders do not take money out of their trading account to pay themselves. So this is a misconception that a lot of retail traders have. Is that sinking in? Everybody's quiet. Everybody's quiet. So I encourage you to have an income outside of trading so that you can benefit from compounding and compound interest. And with what we have, I tell you, right? From what we have, I tell you that if you're patient enough, you will be able to benefit from compounding in a big way. But you've got to be patient. You've got to give it time to grow and compound. So let's see here. All right, let's do a calculation here, right? So let's pull up the calculator. And let's paste this value here. In fact, the interest earned. Let's go to the interest earned. So your interest earned here, let's copy this. I'm not sure if you're seeing the calculator. Are you seeing the calculator on my screen? 1, 2. Are you seeing the calculator on my screen? Okay, great. 463.38. Okay. So this is the interest earned if you left your money to compound over a year's period. I mean, this is just hypothetical, okay? There's nothing to this saying that this is what your account is going to look like. All right. And if we minus that 60,000, all right, so let's minus that 60,000 that you withdraw from your account. Okay. right? So you would have, you say the wrong calculator? Okay, hold on. Let me just see something here. Let me just, okay, there we go. Right. So this is the calculator that we want to see, right? So we've just withdrawn, we've just calculated the amount of earned interest you would have had if you left it to compound, minus the 60,000 that you withdraw from your account if you didn't compound, and you would have pretty much lost yourself $1.227463 million because you didn't leave it to compound. You see how you're shooting yourself in the foot? Nobody's saying nothing. Nobody's saying nothing. So who's gonna commit themselves to at least compounding your account? Now it doesn't need to be over a year, all right? It doesn't need to be over a year. So let's redo the calculation. Let's say exactly committed. There we go. Let's say your strategy is I'm gonna compound for 3 months at a time. Right? Nothing wrong with that, but at least compound for a certain period of time. Okay. So let's go back again. Let's go back again and do a calculation. Let's go back again and do the calculation. So let's say we are now going to compound instead of a year. We're just going to do it for 3 months. All right, 3 months. Let's do the calculation. Okay. So for 3 months on this type of compounding plan, and again, I'm saying that this is just hypothetical, this is theoretical. I'm not saying that you're going to make 50% of your account per month consistently over 3 months, but I'm just saying if theoretically this was the case, your initial balance was 10,000, your future investment after 3 months would be 33,000, over 33,000. You would have made, all right, 23,000 something in interest. Okay. Now, your strategy could be, all right, after 3 months, I will then withdraw my initial investment and then I will just play with the house money. Okay. You could do that. Or, after 3 months, you could say, all right, I'll just gonna withdraw half of my earnings and then leave the rest to compound or whatever. But at least have some sort of a strategy for your compounding. Okay. So one of the lessons, right, and this is a lesson that is not taught often enough, but one of the lessons that we're teaching people here with our Super Scalper tool is the power of compounding, right? Right, the power of compounding. Have some sort of a compounding strategy, right? You'll always see they'll say, all right, if you invest in the S&P 500 or whatever, and let me tell you something, you invest in S&P 500, the yearly return on average is like 8%, right? Per year. Per year. You know what I'm saying? Per year. And then they will say, right, so from the ages of 20, from the ages of 25 to the age of 60, if you invest, right? So you invest in literally for 35 years, right? This is the investment model that they want us to believe. And you do the calculation, after 35 years, your investment will be 100 and something thousand, right? Where you have compounded at 8.3% over the years. Okay, this is the pension model of investing. And funny enough, they haven't even taken out any fees yet. Now, one of the other things that they might do here is we're going to do deposits, right? So if you have pension or something like that, and say you're paying in $200 into your pension and your company is paying in 200, so that's $400 into your pension on a monthly basis over the same 35 years, what that's going to be, right? Let's do a calculation. Right, so all of a sudden, your investment is now over $1 million. So this is the type of calculation that you would see generally from pension plans, annuity plans, all those types of plans. And this is what they will show you, right? But they're not showing you the calculation of the kind of money that they're making when you deposit your money with them and then they invest. But now you've got the knowledge, and you've got the knowledge and the ability to manage your own funds. You see how they want you to think? Excuse me. So if this was an eye opener for you, just type open in the chat. Let's type open in the chat. Yeah. Right? Well, there we go. There we go. So we've got to clear our minds from the craziness that YouTube and all those marketing gurus have been telling us of how we approach trading. One of the other things is that if you approach trading from the point of view of, oh, I need to make a withdrawal every week, I need to make a withdrawal every week, you're putting yourself under tremendous pressure. And this is another reason why retail traders ain't making money, because they're pressuring themselves so much to make whatever they need to make on a weekly basis because they need to withdraw to pay some bills. That's why they ain't making any money in trading, because there's no clarity of thought. You're just putting yourself under pressure. And then because you've made a certain amount, you're not even thinking about compounding, right? That's why you jump back into the market to try and make more. And that is the greed effect happening. It causes a greed effect to come up on you that is not good whatsoever in trading. Understood? So for those people who have not, right? For those people who have not even got themselves over to the super scalpers yet, I encourage you to do so. Okay, I encourage you to do so. All right, this is excuse me. This is my own live account with the super scalper. So far, these are the results, right? So far, you saw a deposit of 10,000. This is just over a week of trading, right? You see, this is the balance right now. Okay. All right, this is the balance right now. So we, as Mr. Henry is saying, we're not playing. We are not playing, right? Past profits do not guarantee future profits, right? I'm not a trading advisor. If you need a trading or investment advisor, if you need trading or investment advice, seek the advice of a registered professional. What we're doing here is for educational purposes only. Trade at your own risk. Past profits do not guarantee future profits. Okay, let's see what's happening this week in the market. So this week, we do have some interesting things coming up. One of the most important and interesting things is this right here. This right here is worse than NFP or better than NFP, depending on the way you look at it, all right? This is the inflation rate for the US. And this is going to shape things up, right? And most of the interest rates policies that we've been seeing in the US and all over the world, where we're starting to see interest rates come down, is all really based on what these figures are showing, right? Really, employment figures and these figures. And usually the Federal Reserve or the Bank of England, Bank of Australia, they would make a decision on their interest rate based on these figures. So these figures are of super importance to the market. So expect to see some movement in the market on Wednesday, okay, where we have these figures coming through. Right. Another important one is for the pound. On Tuesday, the unemployment rate, employment change. Again, that is important because that feeds into what the inflation is going to be. If we have a lot of people who are employed, that means there's money in the market. That means there's going to be spending, so forth and so forth. Same thing for the Australian dollar this week. And then, of course, Thursday, when Mr. Powell speaks, anything comes out of his mouth, the market moves. Excuse me. GDP growth for the Japanese yen again on Thursday, so expect some movements on the yen here. And of course, on Friday, GDP growth for the British pound. That is going to be important. Retail sales as well. That feeds into inflation. All of these figures feed into the inflation figures. Unemployment rate for China. The reason why we look at China is because China's economy spills over into the Australian and the New Zealand economy as well. Okay, so expect a lot of movement and there's a lot of opportunity this week, right? We'll be posting trade setups in the trade setups group, right? And it will be kind of all based around what is happening in the market when these figures do come out, right? So is there anyone in here who wants to get started on the super scalper? If you're not started on the super scalper yet, is there anybody in here who wants to get going, wants to get started? All right, so here's what we will do. For those of you who want to get started, I'm going to drop the link into the chat here right now. If you want to get started, we're going to drop the link here and we're going to drop the code, right, to get your 20%. The code is MIRA. right? The code is mirror. You guys get yourself started right away. For those of you who are already in, congratulations. The market is actually going to open in the next hour or so. There's one point that I want to make, especially for those people who are already in, right? This is a very important point. Now, on a Friday afternoon, you would see sometimes the scalper takes a trade. Like say, for example, last Friday, right here, it took a buy. Last Friday, right here. Let's zoom in. Last Friday, right here, at this position, the super scalper took a buy. When the market opened up way up here. So the super scalper hit 50 pips of profit on one asset. And I think we had probably about 4 assets open at the time. So that, do the calculation, right? It was crazy amount of pips. Literally, people's account doubled in this one move. However, there is a risk there, right? Because if the market gapped in the opposite direction, then your whole account was gone, okay? So therefore, you have to decide as a trader whether you want to risk having the trades on a Friday or not. And I would suggest if you're not that risk averse, then just switch. You could switch the receiver off so that you don't get any trades on a Friday. And I would suggest switching the receiver back on a Monday. Okay. So switch it off on a Friday, switch it back on a Monday, if you're not willing to take this risk. Excuse me. Yeah, there we go. So Darren switches his receiver off on a Friday afternoon. That makes sense, right? That is your own risk decision that you have to take. Remember, you're responsible for your own risk. We will go into a bit more detail of the certain risk parameters and risk settings in the receiver. We'll do a bit more of that on a later date. But for now, this is important for you to grasp. Okay, so are you going to take the risk and leave the trades open, which potentially, if it goes into your favor, you could really see some gains on your account if there's a gap. I mean, there's not always a gap in the market, but if there is a gap, you could see some gains. But the flip side of that is if there's a gap and it goes against you, then that's your account gone. Okay. So just keep that in mind as we go through. All right. So we're going to wrap it up there for the minute. And let's see each other again during the week, right? Welcome to those who are going to get started. And keep compounding those who are here, right? Keep compounding. If you don't have any sort of secondary income outside of trading, I suggest that you do, right? And I'll give you a heads up. We've got an affiliate program coming that will help you with that if you're open to that, right? We have an affiliate program coming that will help you with that. So don't neglect that, because that will help your trading as well, because it helps you to not depend on trading for an income. You've got some sort of a secondary income coming in somewhere else. Okay. And with that said, we are going to wrap it up there. We're going to leave things open just a little bit for those who are still getting themselves started and want to see the link. But you don't have to stay if you are if you're already in. All right. So bye-bye for now. And we will see you on the inside for those getting started.